Recording is on.
Hi, everyone. Welcome to the DXdao weekly meeting for April 8th, 2021. And this is going to be a resources edition and resources with a heavy focus on treasuries. So, treasuries become a more important aspect of DXdao from its genesis, and like having a smart, active treasury management approach is something that we've been refining and is implementing over the past probably 6 months. And so today we're going to start with Dave's been working on a treasury report for the first quarter of 2021, and he's been working on it for a little while now. And not only that, but he like ways to automate it. And so he's going to present a presentation, which is a kind of a summary of Q1 treasury report. I think it would be cool if this turns into like a report that is published out to the DXdao community in the world, and then we'll refine it and continue it and expand it and probably get this going on a quarterly basis and potentially even monthly basis. And it's really going to give a good handle on what the finances are of DXdao and where the money is and where it's being put to work, and budgets and expenses and things like that, and then hopefully soon more and more revenue as well. And then we're going to touch on the next treasury diversification proposal, which we are very close to finishing the first diversification proposal we had that the community agreed on. And so we'll talk about next steps for that. And then we can start, and we can talk a little bit more about resources and recruiting, and I call it the people mover funnel, and then any other things that people want to talk about. So with that, I will kick it over to Dave, who's going to share, I think, his screen and contributor experience. Yeah, we can talk about that too, and then hopefully everyone can see what Dave has to present.
Cool. Just sharing my screen. 1 second. I think you guys should see it, right?
Yep, we see it. It's great.
Awesome. And yeah, as Guy said, it's the first iteration, first time we're kind of doing this. So any feedback you guys have is highly appreciated in the end, so we can keep working and improving on it. So I'll just jump right into it.
Real quick, if people have questions, should they ask along the way, or do you want to hold questions till after you finish the whole presentation?
Feel free to interrupt anytime, yeah. If anyone has any questions,
cool.
Raise your hand. I'll be checking for the raised hands in Jitsi as well.
Great.
Cool. All right, let's jump in. So first of all, the way I've kind of built out the whole report is like doing accounting based on blocks. So it's kind of like trying to follow the regular quarterly dates. These are the blocks we used in this Q1 report. So the next report would, of course, start from one block beyond this 12 million block we started at. On the 31st of March, we kind of finished the first quarter with these holdings across our three main addresses. So, of course, we have the Ether Treasury, which is the DXdao main address, which had a value of about 44.9 million at the end of the quarter. We have the DXdao Treasury, which held a total of just below 1 million. And then we also have the buyback address, where it's just about $5 million in there. So we kind of finished the Q1 with a total of $50.7 million. If we take a look a bit more historically, kind of from like the Q2 of last year, so the beginning of Q3 2020, we can kind of see how the value of the treasury has evolved over time in US dollars, this is. And as we can see, it's a pretty good job to holding on to the ETH for that long, given that the main driver here has really been ETH. But as we can see, it's been pretty much quite a strong growth over the past quarters. We can kind of see a summary here, the numbers, how the values have grown. And the amounts have pretty much been the same, right? It's just been the tokens increasing and decreasing value, the various tokens. And if we zoom in specifically on this quarter of this year, we also see token price, of course, highly fluctuating. So every day we kind of have a different total value. But we can see that Ether, nevertheless, raising value has kind of raised the overall value of the Ether, of the DXdao treasury. If we take out Ether and DXD, of course, in the slides before, given the amount of Ether and DXD we hold, you can't really see any of the other tokens. We can see kind of an overview of the other tokens we hold in our DXdao treasury. And I mean, one of the main ones we see is obviously DMG, which has decreased in value quite a bit. And one of the main things we kind of worked on this quarter was also diversification, right? So getting some stable coins and having some runway in stable coins. I didn't plot this because we pretty much had nothing at the beginning of the quarter, so you wouldn't really see anything on the plot. But this is currently, we hold around $2 million in stable coins. And this is just, these charts are specifically for the main treasury, so the Ether treasury. I believe we hold another 500,000 more or less in the DXdao, DXdao treasury as well. And if we specifically look at the stable coins, we kind of see how the value or the amount of stable coins we hold has increased in this quarter, which I think was one of the main kind of projects of this Q1. And sorry, I'm also checking the chat once in a while, just to make sure if you guys are asking questions. So if I'm interrupting, that's why. And then here we kind of see a overview again on the 31st of March on this specific block number of what we held. As I said, 50.7 million total value. The stable coins are held across mostly on the DXdao ETH chain, but we also have some stable coins, mostly of course DAI on the XDAI base. And on the buyback reserve, I believe someone mistakenly transferred $130,000 into it. So because of course I did the accounting by the block and just pull the numbers from the blockchain, it's listed there, but I believe we do have some intention to returning these to the rightful owner. But they are included in the calculation, given that, you know, I think blockchains are there because they're a source of truth. So of course I used whatever is on the blockchain to report it. And on the right, of course, we can also see that still the majority of the value is still held in Ether and DXdao, even though we did do some diversification into stable coins. The rising price of Ether, of course, diminishes the impact overall in percentage-wise of how much we have. But we did do diversification. It doesn't show that much because Ether just keeps skyrocketing. And then I also just pulled, just kind of see correlation between the value of the treasury and the price of Ether. And we pretty much have almost a complete correlation if you consider that we also had outflows, and most of the outflows we had did go into the XDAI chain, which is still currency kind of tokens we hold. So in a way, it's almost perfectly correlated to the Ether price, which is also not surprising because we don't really have any investments or any yielding assets yet, right? So it would be the only thing that would kind of impact the price, the total value of our treasury. Then I just had a quick overview of the LPs we have on swappers. So our liquidity pools on mainnet, we currently have one liquidity pool, which is a DAI WETH liquidity pool with around 800,000 in liquidity. And of course, at the end of the Q1, we've been working quite intensely on also funding LPs on XDAI, where we currently have 4 total. The largest one, again, being XDAI to WETH, but also a couple of other ones. And one of the things I also took a look at was the outflows, just to kind of get an idea of where the money is flowing. And I think like a Sankey diagram can also be quite nice in, while it might not be that interpretable, it's quite nice to see the decentralization, right? Like we wouldn't want to see all the money flowing to just one address. And of course, the large address we have here is the multi-sig. Most of these funds will, of course, then transfer to the XDAI base. And one thing that would be nice to do in the future is actually connect the Sankey chart with the different chains, so we could see the total flows going from where to where. And over the Q1, we had like 43 unique addresses, which I believe is quite good for having like an average of 15 workers, right? So it kind of shows that the funds are going to different sources. And then here's just an overview of the Q1 flows, where they went to. And I don't know, Chris, if you want to say anything about the last 2 slides.
Yeah, I think just the outflows here. So this was kind of looking at the ETH coming out of the treasury, or like flows out of the treasury. Like what exactly are those going to? And so you can see here, like most of the flows, if you look at the DXdao address, obviously most of the flows outwards were going to treasury diversification and XDAI transfer. That's why you saw that big band in the middle for the multi-sig. But we had, but you can look at kind of the worker payments and then maybe go, next slide here. And I think this is kind of shows the process of both growing and also shifting to XDAI, right? So you can see here we had about $145,000 worth of worker expenses in January. And then that actually increased in February and then dropped off a cliff in March. But that's, of course, because we switched all of the worker payments to XDAI. And then the last one here is, I think, underscores this point a little bit more. So this is looking at the outflows by the token that comes out of the treasury. So, of course, in January, almost all of the outflows were in ETH, even if they were for worker payments. But you can see in February and March, and this slide excludes the treasury diversification and authorization in the XDAI transfer. So this is just for like flows for payments, expenses, other things. And so you can see, like starting in February and March, we basically have much less payments based in ETH and much more of the stable coins, which of course I think is what you would expect.
Yeah, and then moving forward, I believe one of the things we want to do more is a bit more granular tracking on XDAI. I currently ran into a couple of issues. I believe when you bridge over DAI, it's not that easy to track because it gets minted on the XDAI base. So I'm kind of checking how to best track that. It could, of course, be added manually, but I think we want to also build somewhat of a robust system that's automated, right? So just trying to work with that. Otherwise, tracking all the tokens on XDAI works flawlessly. It's just XDAI itself whenever it gets bridged from DAI to XDAI. And then one thing we, of course, also wanted to do was kind of like analyze the funding per product, etc. However, we currently have a lot of liabilities or salaries and DXD vesting that hasn't been paid out. So doing it now would kind of show a skewed picture because a lot of the salaries haven't been paid out. So I know we're currently working on tracking that. And once we have that, we can also probably get some cool information on that. And I've also had a chat with Federico Luzzi about the swapper fees, which is also not the easiest thing to track, but it's relatively straightforward to track both the swapper fees, both the trading liquidity fees, and of course, DXdao also gets some protocol fees, which I believe get sent to the buyback address actually. But that's something I'm also working on. And then in the future, of course, I know a lot of discussion has been going on about the DX Ventures, where we're exploring a couple of projects, as well as some potentially yielding assets in the future. But I believe this is still actively being discussed, right? So there's no real conclusion there. And then I guess I'll also be working on making my plots a little bit prettier because I'm not really a design guy or anything like this. But that's already the end of the presentation. And yeah, if you have any feedback or questions or anything, highly appreciated.
It looks fantastic, Dave.
Well, thanks a lot, Keenan. Yeah, I guess I'll actually just post a DAO talk link with the presentation in there so everyone has access to it.
So I think Pulp had mentioned this early, but or Machina did. But so there's a number of other projects and DAOs that have like released a public quarterly statement about the project to like the public, and so taking all of this data and maybe in presentation form, or maybe there's like a new DAO way to do this, but some kind of like 3-page report or something that can be shared publicly, and we can make a tweet thread out of it and all that kind of good stuff. But it's all, it's obviously all public information. It would be good for DXD holders to all be very aware of this. Yeah, I don't know.
Yeah, absolutely. I mean, I think the report actually started as a report, so a written report. But then we took a look as well at what other DAOs or other crypto projects do. And I think for now we focus on like ease of presentation, right? That's why it kind of turned into a report, into a visual presentation. But yeah, definitely. And I mean, of course, all this information is publicly accessible, right? So I think the main idea is really to present it nicely to DXdao holders or other people as well, and just make it more accessible and easier to interpret. Yeah.
Yeah. I like the idea. I don't know if I like the idea of like taking all these awesome visuals you already made and making it and having like, I don't know, a website just like designer to like put these into like an interactive page that goes on to DXDAO's main home site. But like instead of just going and opening a PDF and looking at a presentation, like they scroll through the treasury area of our site and these all come up like in an interactive way would be my desired path, but maybe that's
yeah.
Yeah.
I mean, I've also previously worked with Plotly, which is like to build dashboards in Python. I could also take a shot at that, but for anything design related, it would be great to have someone else chip in, because I don't think that's really my specialty.
Sweet.
Sky, I agree with you too. It just reminds me of kind of the governance dashboard in general that we talk about. And I think like long term, it's such a cool thing for DXDAO to be able to just like share all of this information like freely and openly, and like kind of make that part of explaining the story of DXDAO. So yeah, how we ever figure out that kind of governance dashboard layout, I think is something we should be.
In this Sankey diagram, like if that was interactive where you like hover on each of the things and then you
like an address that says this address is, you know, in this squad or something like that, and it's gotten this amount paid. Yeah, I mean it's cool.
And then like you clicked in it and then it opened up the new Sankey to like the DXdao branch. That'd be super awesome, yeah. Cool. Any other questions? Thanks, Dave. Amazing job.
Cool. Thank you very much. I'll stop sharing the screen then.
Thanks. I will share my screen. So the first treasury diversification, you guys can see this, right? The first treasury diversification proposal, you know, was drafted and put onto, I think we did it as a signal proposal on DXdao, maybe mainnet, I'm not sure, but it was passed and then we started executing it. This is the second version of it now that we are quite close to the completion of the first strategy. And, you know, this is still just a draft. Like now that we know what this experience looks like, we know that DXdao can do this. We know that there's a few different methods and soon, hopefully like really 3 methods. We've used mainly 2 of the 3 methods. But people here and the community in general are always welcome to propose different strategies, better strategies, different ways to do it. You know, there's an overall arching question that I was thinking about as we were looking at this this Dave's presentation and stuff too, but I'll ask that at the end. I'll just go really kind of briefly through this quickly, just to give an overview, and then we can discuss it maybe. So you got this overview from Dave of what we've done around, like, when we say treasury diversification, we were mainly originally talking about like having dollar stable coins, and the reason for that is that almost all of DXDAO's expenses are in dollars, right? So matching your your assets and eventually your revenues to your liabilities is an important risk management aspect when it comes to businesses or entities in general. And I've seen many projects in especially the Ethereum ecosystem who had raised lots of money, had ideas to build good projects, held everything in ETH, and when ETH went to $100, their treasuries were depleted and they couldn't survive anymore. And so it's a huge risk that most people in the Ethereum ecosystem live with. Like many projects just hold like their own token and ETH token, and usually those are very correlated. And in a bear market, it's a disaster. It's a disaster scenario. And so having enough stable coins to give you runway, and this is like, startup 101, especially when you might not have a plan for like additional fundraise, right? So startups in general have an approach where they raise a certain amount of runway, and then before they're 6 months away from the end of their runway, they already are starting to raise their next round. And if they have good investors and they have a good product, like they can usually raise the next round and extend their runway. In our scenario, especially with the bonding curve and the way the DXD token raised capital for the DXdao ecosystem and projects, I'm not sure that we have like a clear way to raise additional funding. So the funding that we have is very important and treasured. And so this next proposal, so we currently have like $2 million in stable coins with the next 1 million to fill out to the 3 million, like in proposals, I think that are like will be completed over the next couple weeks. And then we have about another 500 grand that we're using in stables on XDAI or being held on XDAI, and also in the swapper pools. Yeah, and then another 1 million on swapper. So it's 3 or 4 million basically, right? And so this plan would be for an additional $5 million of stable assets, which I originally mentioned dollar stable assets, but like theoretically, and this is an open question, like could some of these stable assets be in some other stable asset, like Rye, for example, or Fei, for example, or or there are some euro stable coins, and actually Nathan is in touch with a euro stable token project who has interest in maybe taking advantage of Swapper for some of their needs. And so we can explore non-US dollar stables as well. And so then like with this money that will extend the runway, but we also, obviously that's the main goal, is to have some stability in our treasury. But then with that, if we're going to hold stable coins, it makes sense to put those to use. And so that's where the chat's blowing up. So I'm not reading it. I'm not following it. But anyway, so there's this idea of DX yield, which we've talked about. And so if we're going to hold stable coins, which gives us security and runway, we should put those to work, and we should put those to work in our products, and then we should also put those to work in other protocols, such as something that's reliable and safe, like Compound, and earn a yield, and maybe Y-earn, and then we can get more exotic up the risk ladder. But there is a kind of an open. So in the breakdown, the proposed breakdown is still a mix of like DAI, USDC, synthetic USD, and USDT. That can be altered. Like in general, people are less excited about holding USDT just because of ethos, I think, and potentially risk. And I'm not sure, and then there's other, DAI is truly permissionless, synthetic is truly synthetic, and USDC could be like addresses can be shut down just like USDT, like by central counterparty. And so again, there's three methods there's the Gnosis protocol layer, which we should be ready to start using hopefully in the next few weeks, and that can be a big piece of acting out this diversification, and maybe with larger sizes. There's again the DXdao, the Dev multi-sig, which I think it makes sense to slightly increase like the amount of ETH that it can transact with at any time. It's built up its own reputation like for DXdao and is becoming a more reliable tool that DXdao can use. But obviously we are a DAO and we prefer not to use multi-sigs. We're using multi-sigs for testing. We're using multi-sigs for accomplishing some things that are just not currently possible, like directly by the DAO. And then the third thing is member balancer, which worked really well and really quick and was really quick the last time. There's a really small incentive, or a 1% incentive for people to participate in member balancer, and it's actually it's more trustless than the Dev multi-sig approach, and so we could balance between that as well. And all of these things have gas costs, so increasing one idea of increasing the size and the amounts of how much we do at a time, whether it's putting money into Swapper or we're trying to limit the amount of exchanges. I think I don't know what the total gas that has been spent on. We should probably look at what the total gas has been spent from all of the proposals and executions of the first treasury diversification proposal, but it's definitely in the tens of thousands of dollars, I would guess. And so we want to try to minimize that as much as possible. And so that's an overview. There's a question that I mentioned before so like, what is the goal? So DXD holders have expressed that, like, and we all know that that putting the money to work. So we talk about putting DXDAO's treasury to work is an important thing. And so what is the goal of like seeking yield? And so I think you have to make the assumption that if you're going to hold stable coins, and there's a reason why you hold stable coins, and that's for security, runway extension, and diversification, that if you're going to hold stable coins, you probably want to put those to work to earn as much yield on those as possible. But at the same time, where will that yield go? Will that yield like go to DXD holders, like as a financial thing, or will that yield go to DXdao treasury to then increase the treasury, maintain the treasury, and use that treasury for building products and doing other things? And will this benefit DXD holders? Because that relates to the question of, because we weren't holding stable coins and we were holding mostly ETH, we now have a much bigger treasury. Like Dave just presented, we have a $50 million treasury now. And that theoretically was 100 times better than if we had held stable coins and earned 10% yield. And so does that benefit DXD holders, and what do DXD holders get from that? And so that is a question that still remains open. Like, if we're putting the treasury to work and we're earning money from it, does that money like get paid out in dividends to DXD holders, or does it stay in the treasury? And like, what is the end goal of increasing the treasury, basically? And so I'll open that up to the floor for any comments and feedback on this proposal, and we can discuss.
So I think that the main purpose of the treasury is to fund development of products, but when it's doing well and is in a healthy state like it is now, then I think definitely there should be some returns to DXD holders in one form or another. And there's like a few ways to do that, right? Like, the main function of the buyback reserve, right, is to provide like the floor, like the sell price for DXD, like sending yield or profits to the buyback reserve is, I guess sort of like the main mode of like how product profits should be going back under the like current system. But short-term ways to also provide return to DXD holders would be to do a DXD buyback or add to the DXD buyback. And then I suppose some sort of a dividend could be explored, though that would be sort of like a new mode of doing things.
So when you say like when the Treasury is doing well right now, so the Treasury has made, like, by holding ETH, the Treasury has made $25 million at least over the last 7 months or whatever. Like, that's a great performance. If that was a fund, like, should part of that performance go back to DXD holders? And some of it is, there's $1 million earmarked to buy back DXD, which is flowing to DXD holders. But like, how do you decide how much of that $30 million performance increase is going to go to DXD holders? And that, I don't know if we've never really talked about this.
Yeah, I mean, that's a big question. And I mean, so I think we need to anchor things in like the budget and like roadmap and having a certain amount of runway, right? Because I think if you carve that out, then you understand like what you're working with in terms of assets to like provide returns and to distribute. So like, I also think that it's important in crypto to be aware that the markets are very volatile, right? That we could very well go back into a protracted bear market, and the idea would be to survive that, right? So like, to me, like, I think a good number in runway is like 5 years. Like 5 years of budget runway should be secured. And I think the current Treasury has more than enough value currently to do that and more, right? So, but I think we need to kind of dig into the numbers and sort a lot of this out, though.
Yeah. And is there logic behind 5 years? Because 5 years comes for like a startup, like a traditional startup is extremely long. 5 years for a DAO, we don't know what good runways are for DAOs. We've never really had it. So 5 years sounds like a good number. Maybe it should be 10 years. Maybe it should be 2 years. Who knows, right? Depends.
Right. Yeah, I mean, yeah. Go ahead.
Oh, I was just thinking that one thing to consider is most startups want to be purchased or IPO'd. So they have a certain time frame that they're working under in order to pay back investors. It's kind of like the clock starts ticking once they get that investment. So we definitely have a different perspective as like, what's the long-term goal for us? So to me, 5 years sounds good, but you're right. I think it's something we should look more into and discuss as a community, like what's our purpose? What's the goal long-term?
But I think regardless of where we end up, we're kind of talking about whether it's 5 years, maybe it's a little less. Like, I think we are all in agreement that like where we are now is too heavily exposed to ETH, and we should be moving over the next couple months to like diversify and buy, I think, more stable coins. Now, like what that ultimate endpoint is, whether that's like 5 years of runway, I'm not exactly sure. But like, I think at least for like this Treasury authorization proposal, I think regardless of where we fall on the long-term like thing, I think we should feel comfortable with like, okay, given where the market is right now, given where we're like moving in the products, like I think $5 million, committing to $5 million of like the next 3 to 4 months seems about right. And then after that, we'll kind of like understand a bit more. But like it is, I mean, there are like lots of existential questions about like the meaning of the Treasury, how it like kind of aligns with things that I don't know if we'll be able to address in this, but I think like broadly speaking, we're in agreement on like where the short-term direction is.
Yeah, a cool thing that could be published to the community, and this is something that I've never seen a crypto project do, is in our current state, and then in our state with another $5 million of stable coins. Like, if the market goes, into a bear market, a semi-bear market, an extreme bear market, or a bull market, extreme bull market, like in 7 different scenarios, given our budget, given our treasury, what are like how that affects our runway, like in those different scenarios, and it will very publicly show the world that we are thinking about this and that DXdao is here for the long term and wants to survive and build through a bear market. And I've never seen any project do that. And so that maybe Dave, or with some help of us, we could publish something like that as a separate report, like following the treasury, the quarterly one.
Yeah, also just wanted to say that one of the dates that are important for DXD is the open until at least or something like that. That's a value that is on the DXD curve. So after a certain date, after a certain date, you are able to close the bonding curve if you send enough. If you send enough ether to the curve, you can actually close it because that will end up the DXD curve cycle. So there we have a date that was set to, I think it was set to 5 years when we created the curve. So maybe we can use that. We can use that date as an estimation to get, okay, we can get enough funds to have a runway till we are able to cross the curve, and then we can recap and see how much ether do we have, how much revenue did we generate, are we sending it back to the curve? If we got enough to close the bonding curve, which I think that would be the ideal scenario, that is that will be the game over. Like if you raise enough money to close the curve, that's it. Like you kind of like already won the game. So that's a data we said. Maybe we can use it. You cannot change it. I mean, you can change it. You can put it. You can make it longer if you want, but you cannot use a lower number.
I think most people probably don't know what is meant by closing the curve. And I'm even a little rusty on what the definition of that was. Do you know, Augusto?
I think it was like if you send enough ether to being able to sell all the tokens at the last at the last buying price, that's it. You are able to close it, but you need to send a shit ton of ether to being able for everyone to sell their tokens at the last buy price.
So the last buy price of the curve was a little over 1 ETH. So I think like that number would be like 150,000 ETH or something. Then is that what it would be to cover the total supply? Yeah,
I think so. I need to check it out, but I think so.
Basically, this is like a Fairmint, like a feature of the Fairmint smart contracts that are the bonding curve. Like it's actually possible to like close the curve by sending like enough ether to it to like pay. But I don't
where
really.
Is all of that? I mean, I guess like to me, every like sending would all that ether be in the bonding curve forever then?
No, so
like 100,000 ETH.
I thought the idea was the curve. You basically send ether so that the buy price and the sell price become the same number, and then people going forward it becomes a true bonding curve, like how Aavegotchi works, where at any time anyone can sell onto the curve, anyone can buy from the curve, and it's always the same price, and that price moves up and down the curve. But as more and more revenue is produced, it goes into the curve as well. And so if you just hold the token, that buy price sell will grind up the curve over time. But at any time, anyone can exit their position by just selling onto the curve at that price.
I'm talking about, we just looked at we're talking about diversification. And the one thing we cannot diversify is the ETH in the buyback reserve. And like, so the ETH that's sitting there is not really doing anything. It's not being kind of put to work. And so I guess like, I don't know if we should be sending more ether to that if it's not being put to work.
Well, it's what allows anyone to exit their DXD and get ETH at any time.
Exactly. the important part here is that it might look that it's not doing anything, but it what belongs to the DXD holder. So it's like you are paying them back.
I know, but I bet DXD holders would rather that Ether be like earning a small yield somewhere while it's also sitting in the buyback reserve, right? I mean, this is kind of like separate. I mean, I guess
this is separated, and we don't have now when we update the curve. Maybe it will make sense to have a DXD guild that is going to decide what they want to do with their buyback reserve. But eventually, they are the only ones who can decide over that funds. Right now, you're right. They cannot do anything with it, but they don't have the option. They don't have the option to choose what do they want to do with it. So.
But that the logic of how the curve is supposed to work, I don't think we can ever use it now, because if we halt the curve, then you can't buy and sell on the curve. So we can never achieve the mission of what the actual curve was supposed to do.
Oh yeah. That's right. We already kind of gave up on it.
We've got 6 hours. Someone could vote 6 or 7 hours.
I mean, it's not like we. I won't tell you like we gave up. I think that we halted for a time where we figured out how we want the curve to continue working, because I think it's super cool, and it was decided, everything was designed in a way where, man, you can close it. I mean, you can pay back all that should be the final goal, right? To pay everyone that puts money there, like their money back and a revenue plus that. But that's hard. That's extremely hard to do, but.
Yeah, I mean, I think we need to. We'll figure out kind of a long-term solution to that. I think that is ultimately how this question, Sky, that you're talking about of like treasury value get translated into DXD. It's through that, but I think that's separate from that. Like we can still move forward with like diversification of the treasury to like drive to help support products and eventually DXD.
Cool.
Yeah, so I'm looking at the definition of closing the curve in Fairman right now. I think it's a little bit technical and maybe not something that we would ever touch. But it's an interesting point that Augusto brought up. It's just like this technical feature that is there, and I think Sky, you're basically right. Like with the halt of the bonding curve, it really sort of like precludes closing it. Like it doesn't really make sense to close, because the idea of closing the curve would basically be to pay out enough money so that all DXD holders can have the all-time high value. And I mean, certainly that makes no sense if you pause the curve, and it probably is not something that DXdao would want to do anyways. But I mean, it's just this kind of like deeper technical feature to Fairmint.
Yeah, I mean, but like if you guys are familiar with like other bonding curves, whether like in art or like they're kind of Ponzi schemes, right? But like they actually work. So it like the Aave-Gachi bonding curve, you can go on there and you can buy or sell your Aave, your whatever the ghost token at any time. And so that's actually, and Augusto and I've talked about this a bunch in the past when like the whole debate about halting the curve was happening, is like that's a really cool idea. The problem is it's super capital inefficient to get to the point where like DXdao turned into a curve where at any time, if you're not happy with what DXdao workers are doing, you literally just sell your DXD under the curve. But then people that believe in DXdao, they buy DXD from the curve and they hold it because it's probably going to grind higher as more revenue goes in. But that only works once you get to the point on the curve where the buy, sell, and the buy and sell price are the same exact price. And we're so far away from that like it's hard to imagine getting to that point, and it's super capital inefficient to like have all that money just locked there. So unfortunately, I guess we could always create a new one at some point in time to have a real bonding curve, but this curve like didn't really work. Yeah.
Yeah, it's almost like instead of a buyback reserve, wouldn't it be better if that capital was creating a yield, which was actively buying and burning DXD at the current price, right? Instead of just putting a very low floor under the price and remaining inactive. Yeah. In theory, that kind of thing is possible with an upgrade to the curve. It's just a major effort.
Exactly, it's possible. We can upgrade the curve and make those changes, but
so just to shout, because I actually put this in my last worker proposal. I think this is something we eventually need to like tackle, and this is not something we can just like figure out now, and it's not even just a technical change. We have to figure out like consensus. But I think we should like create a working group on this and like, you know, talk about this over a couple months to figure out exactly what to do here. Because I actually think we're pretty close to, like, I think upgrading it to something similar could really unlock a lot of capability. And I think it's ultimately like just unlocking capital efficiency. Like, it's really the same thing like Faye is doing, right? It's the same idea. It's like, oh, well, what if you can create like $2 billion worth of stable coins, but not have to have $3 billion worth of ETH backing it, right? Like, then you could have $1 billion worth of ETH backing it and create $2 billion worth of stable coins. It's just like a much more capital efficient thing. So anyway, I think this is something we need to devote a working group to.
I'm not sure what it has to do with Faye. I don't know much about Faye.
It's capital efficiency.
But I agree with the concept that there's
Maker
4,000 ETH sitting in the bonding curve that needs to be doing something other than sitting there. Let me just finish what I'm saying. I agree with the concept that the buyback reserve should be doing something for DXD holders. I think that's simple and easy to understand. Like, I don't think we need to draw analogies to other projects that people may or may not understand.
Okay, well, in Maker, you need to be over collateralized to produce DAI. And that's similar to like the bonding curve now, because the ETH in Maker is not actually doing anything. It's just sitting there. It's backing DAI. Whereas in Faye, the ETH, there's less ETH. That ETH is also sitting in the Uniswap pool itself, supporting liquidity of Faye. So it's just becoming more capital efficient. And that's all I'm saying.
But that was the concern with Tether. Tether is under collateralized. I don't want to hold Tether. I don't want under collateralized, do I?
So Faye uses a bonding curve is the reason I compared it to them. There's bonding curves everywhere. Uniswap is a bonding curve. Like all of the lending platforms are all bonding curves.
Just wanted to add to what John said, that about using the buyback reserve. A very important point here is who decides how we use the buyback reserve. Actually, not how we use DXdao. The buyback reserve belongs to DXD holders, and here we have to be very careful on how we shouldn't impose any weight for using the buyback reserve. We should enable DXD holders for them to be able to decide, okay, we want to use the buyback reserve, to generate the yield revenue on putting the Ether, on a swapper pool, for example. Anyway. So we should be very careful there, because if we take ownership over that too and say now the buyback reserve is going to be used here, they are not going to have any power over that at all. Which I think we want to make them involved somehow. We talk about this in Governance 2.0, where we want also DXD holders to be involved in governance decisions. So maybe all this is related, where how can we bring DXD holders into governance by taking ownership and responsibility over the buyback reserve.
Cool. So we're getting near the end here, and there's another call after this, but in terms of resources and workers, now with Melanie here and Ali as well, with a new candidate that I was in touch with, I'm like putting that candidate through the people mover funnel and seeing how, like, they don't know much about DXdao, and I've talked a little bit, but like it would be a good test of how a brand newcomer can learn more about DXdao, what the opportunities are, where that person could contribute, and then if they want to move ahead and start contributing in some full manner or a small manner, the DXdao open position stock still is missing. There are a few different ones that are finished and are like solidified as their own position, open position document. There's still a few positions on there which were listed but don't have really good descriptions for like how someone could understand what that position means and what they could do. So if people could look at that doc and fill out any of those open unfinished positions. Then with recruiting, we're still, I don't know if there is a proposal, but I think there's going to be a proposal for working with the recruiting firm to potentially look for a marketing lead.
Yeah, I'll finish on something about by the end of the week. I haven't done that yet, but it's on my thing to do today.
Cool. And then the last thing was there has been discussion around like worker compensation and maybe doing a refresh of it / an update. There were some DAO Talk posts that from outsiders that potentially it should be increased. There was pushback from one or more DXD and community members that like seeing results and actions and accomplishments from DXdao are important before things are changed or updated. I think there's a balance between the two, and incentivizing, having the right incentives in place, long-term alignment to get and attract the people that DXdao needs in order to accomplish the goals of DXdao. It really is like 4 or 5 like micro startups of different products and different focuses all within DXdao. So like, even though we have a big crowd here, it's everyone's working on lots of different things and we have lots of different things going on. So it's not like we have major solid teams. Like most projects in the space have just one single product that they're working on, and they have 10, 15, 20 people just working on that one product. We have like at least 4 different initiatives and products that we're working on. And so when we have the resources and I think we need to fill out the missing pieces that are missing. Yeah. So if anyone has any final thoughts or questions or comments about that stuff in general, now's a good time. Otherwise, I think we're done.
Lots of great worker proposals, and I love Adam's meme with Bart Simpson. That was great.
Oh, I've encountered, and I've been looking out for and trying to help, but I've encountered a few people over the last couple months that have been doing worker proposals or DXD proposals, and it seems like some people just like do propose, like there's a lot of incorrect proposals basically, and then luckily it's on DXdao, so it's not a big deal. Like you can just do another one. It clutters the system, which is part of the system's problem. But I think especially for someone doing a proposal for the first time, whether it's for rep, DXD, or compensation, should really make sure that they run their proposal by another community member, mirror after some that were clean and clear and had already passed, or talk with Melanie and Ali about it as well. Exactly. Because there's obviously still this weird confusion, and like a lot of people are requesting XDXD. Like, first of all, there is no XDXD, and second of all, you don't request XDXD to yourself because it has to go into a vesting contract if you're going to get DXD, and that's mainly on mainnet. And the vesting contract, unless you set it up yourself, doesn't exist. And we're working on a better system for it. But like recording what the numbers of the rep and the DXD in your proposal is the important part. But actually requesting XDXD is just wrong. So like anyone that's doing that clearly we haven't made it clear that what the process is supposed to be. Basically, I'm not blaming anyone. People are trying to like be self-sufficient and do their own proposal, but like checking with other people is a way to like make sure you get it right the first time, I think. So yeah, we have a couple outstanding ones that are like that. So feel free to reach out. I'm happy to talk through any of them with anyone. So
yeah, that's a good point about cluttering the UI. And I'll talk to DAOstack about hopefully kind of improving upon that. And yeah, it's great to see Melanie and Ali helping people through the process and stuff. I think that's going to make everything more efficient and really enable us to recruit to the level that we need to really like fill out the teams. And also just great to see Dave's presentation today, super legit and awesome to see such a great breakdown of the treasury.
John, I don't like what your logic, like your thoughts about the alchemy and the interface and stuff. Like you don't really want a way to hide them, right? So like,
no, we can't hide them. I mean, there's a couple of things, right? Like on XDAI, the expired ones aren't getting removed, so that's just a little bug that could be fixed in Alchemy. Something that could be done in terms of like incorrect proposals, just kind of building up and cluttering like the queue. And we did this on XDAI, actually. We shortened the period a little bit compared to mainnet, but you could have proposals expire more quickly, so that like when something is incorrectly proposed, it's just not sitting there for a month, right?
Yeah.
Yeah.
John, what happened with the Block Rocket application that they were doing for the vesting and all that stuff? I mean, what's
the status of that is they've been super slow, unfortunately, but the smart contracts are like ready for review. And the last message I had with Andy from BlockRocket earlier this week was asking him to give me a link to make it public so I could share it. They actually put in a payment proposal on XDAI, and I said I was waiting to boost it just until I could like share their actual work. So that was my last message to Andy, was like to ask for that link. They had also committed to doing like a simple UI. I don't know if that's been started yet, but we can.
Oh man,
yeah.
But yeah, we started with that in December. Like we should definitely find someone else because we started.
Yeah, they've really dragged it out, and yeah, unfortunately, I don't think they'd probably be the best to continue working with. But let's try to wrap this one up and yeah, find better people to work with.
Yeah, definitely. Just want to say we should find people more committed to that because they cannot take that much time for that. I mean, we started talking about that in December, and it's super. We need that. We need that because we cannot be creating DXD vesting contract on mainnet for each proposal, right? So we actually need that. I have 2 or 3 vestings that I haven't done it yet, and I think other workers too. So all that thing is, it's being, it's being piled down. Like,
yeah, it's a big problem. Obviously, it kind of it makes Dave's job more difficult with the accounting, right? I think the one good thing is because there's a 1-year cliff, it's not like people aren't getting something in their hands that they would have anyways, but it's at least an accounting problem that we need to fix. So
unless we don't have it for a year.
Yeah. Sorry?
Unless we don't get it for a year.
Yeah, it needs to be solved within the next few months. And the smart contracts are ready, so I'm just waiting for the public link to share there. So we can definitely push on it.
Cool.
Something else, this is like kind of late in the call, but something that's come to my attention that I'll want to bring up and speak with everyone about at a later time is that I think for all of our accounting purposes, the way that the blocks are processed from after the 1-year vesting cliff through the 2nd year could be an accounting nightmare when it comes to tax season for us all. So I'll try to reach out and explain that in more detail to the relevant people. And I've confirmed this now, at least for Germany and the United States. So I'll just continue looking into it and see maybe if there's something that we can do now if we're redoing the contracts that might be really helpful for us.
Yeah, and I think there's a lot of uncertainty when it comes to crypto and taxes, kind of broadly speaking. And my one piece of advice to anyone working on their taxes would be to be consistent. You know, to do your best and be consistent in how you're doing it.
And thank you, IRS, for giving us another month for us Americans. They delayed the tax returns to May 17th. So
Other countries be like, "What? You have to calculate your own taxes?" Yeah.
But that's the stress.
Thanks, America, for having the dumbest tax system in the world.
That's the stress you see from Americans right now about like airdrops, yield farming. How do I account for that?
All right. Thanks, everyone.
Cool. Thanks, guys.
Bye.